Good afternoon. In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Now, I did finish last week with, let's see, 29 wins, 6 losses for a win rate of 82.86%. So I definitely made it over my weekly goal of 80%. So I'm not going to complain there, even though I took some unnecessary losses. But, you know, it is what it is. I'm not going to lose sleep over it. Then I did finish the month of April with 102 wins, 14 losses for a win rate of 87.93%. So I had a pretty good, strong month. I'm trying to, get the goal of 85% plus for the week and for the month. If I can do that, then I feel like I'm doing pretty good. But I know that I usually set a goal for 80%, but I'm trying to up it a little bit. But oh well, I did meet it for the month, not quite for the week, but I'm not going to complain. So with that said, we can get into the the trades. This week was really kind of nerve-wracking. A lot of fake outs, a lot of just ranging. So it was pretty tough here and there on certain days. Now, at the end of the day, we used to get some pretty predictable moves, but lately the end of the day moves have been like if SPY's down like $10 or $12, you would think normally in most normal cases that the last 10-15 minutes you would get a short squeeze from shorts covering and it would pop. And I tried to do that a couple of times this past week, and instead of SPY popping the last 10 minutes like it traditionally does, it just went a lot further down. So it just was kind of caught me off surprise. Usually, when you're having a down day of $10, $12 at the end of the last 10-15 minutes, you're going to get some kind of shorts covering from the futures before close, but they just keep going down more and more. So it just was kind of annoying to see, and but it is what it is. You have to trade the market you have, not the one you want. So now let's see, what was Monday's date? I can't even remember what day. What? Wrong month. I'm looking at May here. 25th. Okay, that's what I thought. Now, in the trade ideas room, I said Monday. I didn't put out a watch list last week because there was no point, because of all the big tickers that we were watching had earnings, so it wasn't even worth looking at. So just had to let the earnings come and go, and then we'll get back to normal, to the regular scheduled program. So yeah, the let's see, SPY calls over 426. I said pre-market, so 25th right here. Let's see where the 26 is. 26 is SPY calls over 26. Why did I pick 26? That might have been right here where it broke, where I had like support. No, it's 27. Oh, it might have been this tail candle right here. It's kind of high. What time did I put that out? Let's see. 9:16. Oh yeah, it might have been right here. Yeah, it looks like SPY was right here at the 424, about 50-ish area when I put that out. So I was using the this area right here as a break, and then I just dumped it open. But I did manage to grab calls at 10 o'clock, which is right here. It dumped down, and I've been trying to to wait out the first 10-15 minutes on a lot of the tickets, especially SPY, because you have these fake outs. And I'll blow this up because it's really annoying to see it that low. Okay, so I was thinking about taking it right here, but I didn't. For some reason I didn't. I probably should have. I should have taken it right there. But I did take it at 10 o'clock. I took the 420 calls at 10 o'clock. Now, Now, why did I take it here? Is there any particular reason? Oh, yeah, I think that you have to check my Twitter. Yeah, you have to go on Twitter to see the timestamps. Yeah, this is why I focused on calls because of I posted that the put to call ratio on Sunday was at extreme highs, and I was trying to not go in short, knowing that there's a possible short squeeze coming. So this is why I didn't take it here. But normally I would have. But when you put the call ratio was as high as it was like zero point 0.8, I believe, which was the last time it was seen at this high was down at the COVID crash. So usually when you have those kind of plays during like the COVID crash, that yeah, even though it dropped quite a bit, they had dead cat bounce days that were like they would drop like $15 and it would dead cat bounce $15 and it would drop back down to lows again. So that's what I was anticipating, and it just dumped it open. And then when it started to find bottom right here, I grabbed the 420 calls at 265, and they went from 265 to 312, and that push right there. Then I ended up grabbing them again at 1026. Okay, 1026. Okay, so I already did. I bought it here and it popped up. Then when it pulled back down, I bought it again, but I did it with the 424 calls this time at $1.55, and they went from $1.55 to 225. So what I've been doing is I've been selling the pop. So when you get these little micro pullbacks, like say right here, for instance, that if I bought right here and I would sell right into the 20 EMA or the VWAP, then you get this little pullback right here, knowing where the put to call ratio is, that I would rebuy it right here for the next leg up. And that's what I've been doing a lot, especially on that end of the spectrum, because I was only looking for calls because I did not want to be on the short side. So yeah, I got this little pop here, then I had this little micro pullback right here. This is where I got in again. So at the 424 calls at 155. So yeah, I got a rate. Probably got a lot closer up to here. But yeah, 426. Yeah, I got it right in here. Then I ended up grabbing 420 calls at 11 o'clock, which is right here. You see it popped up, went rejected pre-market high. Then you had the sharp red candle right here. So I bought the 420 calls again at 246. The same thing. Anytime it had the nasty dump or drop, I always keep rebuying the calls because of the put to call ratio. So that was my whole thesis on Monday, was just buying the calls and on every dip. So I had the 420 calls at 246, then it went from 246 to 315 in that little pop right there, and then you got another drop right here. I got calls at, let's see, 11:35. Okay, I got this drop right here. So yeah, I bought it here, sold into that pop. Then when it came back down, I grabbed it right here, and then those were the same 420 calls. This time I got it $2.59. It went from 259 to 384 if you held all the way through. Now the one thing that you have to keep an eye on, what SPY loves to do, is that SPY will love to like try to make a pop, that it will come back and test lower day. Then what they'll do is they'll lure longs in for a false sense of security, if you want to call it that. And then what they'll do is a lot of people will buy right here, will put the stop right at the lower day, and they'll make a quick little knee-jerk reaction to take out the stops before they rip, because that's exactly what they did right here. They popped it up. People probably jumped in a lower day, which I was one that did, but I sold into the small. I've been selling into the small moves because SPY can just do a 180 on you really quick, and it did. So, and that's when I ended up buying it right here. But when it made a new low, I wasn't too worried about it because I was still thinking how extremely high the put to call ratio was, and even if it did make new lower day, they're probably taking out stops, so that's not going to go too far. And then it just ripped right there. So yeah, That was my logic. So anytime you do see this, they have been making one little push to lower day just to take out the stops. They do a lot of stop fishing this week, and actually they do a lot, just more so lately than they usually do. Then I took 420 calls at 107, which is right here. Yeah, right here's where I got the last one. And then it dumped right here underneath VWAP a little bit. And I got the 420 calls again at 107. So that was right here on the break right here. Yeah, I got the break, but I didn't get that much out of it because I was only looking for a quick little pop. Let's see, 107. I probably bought it right down here. I probably got it closer to down here than I did up here because the next candle starts at 13.10 and I got it at 107. So I bought the VWAP drop right here. So I had the 420 calls at 272 and then went from 272 to 424 on that pop right there. And then I end up going and getting SPY calls again. Now, I wasn't playing SPX until the end of the day because they were so expensive. I mean, they were really expensive. So I had to wait to the end of the day, and I was actually struggling to get the challenge play in because I actually had to wait until like in the middle, like 1 or 2 o'clock. So yeah, I did get SPY calls at 107, which I just went over. Then I ended up grabbing 423 SPY calls at 119, which is right here. And we got the dip here, popped up. I bought the pullback on the same thing. It's holding above the VWAP, but you know, like I said, also at this particular time there was an inverted head and shoulders forming. You can see the left, the head, and a little right shoulder right here. Doesn't have to be a picture perfect head and shoulders as long as you know it's there. The neckline being the 424 level, you could say. So when that did sell into that pop, I mean, when you buy calls at 272 and they go to over $1 something, that's a good move on SPY. Take it. You don't usually see whole dollar moves on SPY unless there's a lot of volatility, but yeah, definitely had to take that. Then you bought the pullback, which I did at 423 calls at $1.66, and then the $1.66 calls went from 166 to 387 on the push up. Then I ended up grabbing at the end of the day SPX calls at 305, which is right here. You got the 200 EMA drop. The 200 EMA, which is a purple line. It came back and tested the 20 EMA, and that's where I ended up grabbing it. I grabbed it right in here. So I had the SPX. It's the only SPX play I had on Monday as far as the main account. The challenge, I didn't even get the challenge account till like what? Let me just check the challenge account, see what time I played it on Monday. Where was Monday? Yeah, 2:10, 2 o'clock. Yeah. So yeah, I got the 4270 calls at $4, and just from right here, from this move to this move, they went from $4 to 28. So a 600% move on that play. And that we were really looking at because of the put to call ratio. That's why you need to look at the put to call ratio and look at these extreme levels when they're really low. When there's too much activity on one side and there's too many put holders, they're going to squeeze it to take out the put holders. If there's too many calls on one side, they're going to pull the rug and make as much as them as worthless as possible. That's what the name of the game is. The market makers don't want too many people on one side, and when too many people are on one side, that's when they end up screwing a lot of people over. That's why a lot of people do not do well in the market, because they just think, oh, the market's just going to keep going to the moon and keep going to the moon, or it's just going to keep dropping and dropping and dropping. And they don't realize that the put to call ratio does have a significant play in the market and the way that things operate. So you do have to keep an eye on that, which I will be covering that in the watch list, because they're pretty extreme right now, but compared to last week, not as much. But you have to watch the watch list for that to figure out that. So yeah, Monday I had 7 wins, so flawless Monday, not too bad. Then I think this is where I took no, this is not the end of the day where I took a loss. Now Monday, non-expiration day. Or was it expiration day? Not Monday, Tuesday. Maybe Tuesday was an expiration day. I don't remember. I think it was. Because I'm playing SPX and it's $5 at the end of the day. So yeah, it's gonna be expiration. So anyways, trade Andy's room on Tuesday. SPY closed over 428. As you can see, we had this big monster run. Thought maybe we're gonna get a little bit of continuation. 428 is this level right here. I was looking at possible break up here, but it didn't, so I switched sides pretty quickly. Okay, I just had a look in the room, had to answer a message. There was a head and shoulders. You can see there's a left, there's a head and a right shoulder. So I was kind of looking at that, but I was thinking maybe we're going to get a little more continuation, but we didn't. We ended up dropping, so I ended up grabbing puts at, let's see, 941, which is right here. As you can see, when it made this first red candle down, I was looking at ORB, which is open range breakout or open range breakdown. In this case, a breakdown. Let me blow it up so we can see it. So this is the first 10-minute candle. I only used the 10-minute candle. So once the 10-minute candle is formed, if it still looks weak, I will buy the next low of the 10-minute candle, which is right here underneath the 425 area. So I grabbed as you can see, I grabbed the 941, literally 1 minute after the second candle formed and it broke the lower day. I grabbed the 423 puts at 280, and then went from 280 to 482 in that drop. Then I ended up grabbing grabbed SPX calls at 1043 right here. Now, why did I grab them right here? I'm sure there's a reason why I grabbed it right there. 1043, which is right here. Oh yeah, I see it right here. Pivot right here. You can see it's resistance right here, support right here. This is where when it dipped down under, it has a little false sense of security right here. See, they did it here, popped it up, made a new low, popped it up, then they did it again. But because it went to this pivot, I grabbed the SPX 4270 calls at $3.30, which is a little bit out of the money, but they went from 330 to 540 in that little push up. So I did have a plan. The plan was right here at this pivot. I did scalp that. Then I ended up grabbing SPX puts again. I play SPX the entire day. Yeah, it had to be expiration day on Tuesday because I wouldn't have played it. And if I did, it would have been $20, which I did play, I think, on Thursday. And we'll get into that when I get to it. But yeah, I bought that right there. And same thing when it popped back up, dipped down at lower again, and I did buy them again at 1043, 1106, which is right here. Popped back up, broke lower day. I grabbed it right here. I grabbed the 4260 call this time at $3.90. Actually, no, the 330. Hold on. This one right here, the one that I had for 330, what they do? 330 to 470 right there. Okay, I got the numbers mixed up. This one was 390, and then went from 390 to 540 right there. Now, when you play SPX, one of the rule of thumbs I have is you can hold for these massive moves, but the chances of you getting one of these massive moves is literally 1 out of 10 times. I mean, you don't know which is going to be the massive move, which is not going to be, and if you try to hold for a massive move. You will lose more than you will win. It's just not worth it. But if you stick to the rule where you take 50 cents to $1 and start, scaling out, or maybe leaving one if you want. But me, I just like to get out, hit it and quit it, and just move on to the next, because I just like to move around like that. But yeah, if you stick to the 50 cents to $1, get 10 contracts, or you get a dollar moves $1,000 just in one play. So you can't complain about that. And the normal person does not make $1,000 a day unless you're a lawyer or a doctor, and some of them don't even make that. So unless they work long hours. But yeah, there's some lawyers out there that don't make $1,000 a day unless they own the firm or something like that. But yeah, $1,000 a day is really good, even if you just take in one play and stuff like that. But anyways, enough of that. The next one is, let's see, it took the 4260 calls again at, let's see, 1106. Wait. 1106, which is right here. Got that pop up, and I grabbed it again at 31, which is right here. No, right there. Yeah, got that little pop up, sold into that, and it came back down again. I dip bought it again. This time at $3.30. I'm getting kind of sidetracked here. Okay, first one was right here, 1041, which is 330. Then this was the 390. Okay, this was right there, 330 right here. Same thing. Selling the 50 cents to $1 pop, dipping, buying again, dipping, buying again. I know this is dangerous on a knife like this, but I just didn't think it was going to. I just kept trying to fish for the bottom and using previous day's actions and pivots. But yeah, I grabbed it right. Let's see, 1131, which is right here. As soon as I sold into this one, it dropped back down. I got it again. This time it was the 4260 puts at 330 again, and they went from 330 to 460. Not that much of a play. Then I grabbed the SPX again at 12. Same thing. I literally kept doing the same thing, except this time I think I waited. I waited for this to break. No, at 12 o'clock. This starts at 12. No, I did not wait for that to break. I kept doing the same thing. It would dump. It would pop up. I would sell. It would dump. I'd buy and sell. Buy, sell, buy, and sell. So this time it went from 325 to 880, and that pop up to VWAP. Now I should have grabbed puts right here, and I just didn't. But I did grab calls at right here. Now, the reason I grabbed calls right here, because I really thought it was going to break, because we had a VWAP rejection, came back down, retested this area where it broke out, which is right here. Then it shot right back up to VWAP very, very, very quickly. And usually when you have a rejection and a quick rebound, they like to have a tendency of trying to break out or break above VWAP and making a run. It just didn't. It just was a huge fake out. I mean, pop, fake out, pop, and I got in, then it just dumped, and then it never recovered. So that was my first loss of the day, and that just didn't work out. But it is what it is. The chart was there. It looked like it was going to do something. There's not much you could do. That's just part of trading. It just looked good, and it just quickly rebounded. I thought it was going to go, so it just didn't. It was a complete huge fake out, but it is what it is. Okay, now on to Wednesday. Okay, Wednesday was, let's see. Yeah, Wednesday didn't do so well. Okay, Netflix is one I had. Whoops, I typed in the wrong ticker. Why do I keep typing Z? I'm fat fingering it. So let's see. Trade ideas room. What did I say? SPY puts under 416. Netflix calls over 198. Drop down 198. It's right here, and you could have used the 199, but Now, if you watch what I do when you have the first candle pullback, which was a pre-market right there, I did test this level right there, 193 that I had marked out. When it bounced off that, I grabbed it right here. I grabbed it right at open. What time was the timestamp? 9:40. Oh, I waited. I actually did wait to 198. I should have grabbed it down here, right in this level, right in the 196. But whatever. I did wait out the first 10 minutes, so I did stick to that. It was just a quick little pop, not much of a play, but I did grab the 205 calls at $2.50. They went to $3.15. Not much of a move. Now, when you get used to playing SPX or you start playing SPY when they're really, really highly volatile, you get used to these dollar moves. And when you switch to something like Apple that barely moves, you get kind of discouraged because you're like, okay, Apple moved $1, but yet the option price only moved like 20 cents. And you're just like expecting it to be like $2 and it's 20 cents. So it's just kind of annoying. That's why I like playing SPX and stuff like that, because they move quickly. But if you time it right and you play it right, you make a lot of good money. But if you don't, you can lose a lot too. Now, let's see, let's say I took SPY at 10:14. Let's see what SPY is on Wednesday. I keep getting confused on what date it is. Now, Wednesday I took SPY calls over 10:19. 10:19. Right here. This was one of those days where I think that I was expecting it to range. Yeah, got the major pop up, major drop. I think that I'm not quite sure what this candle was. It might have been something about the Fed or something. I don't remember. But he had this massive red candle, and I mean, look at that. It's from 422 to 416. You're talking in a 10-minute candle. That thing went $6 in one candle. I mean, it's gonna have a retracement. So, and whenever you had these massive green moves like this, to do like to retrace at least 50% of the move, and it did. So, I grabbed the 419 calls of $1.60. And they went from $1.60 to 3.15. So that was a nice little play. Then I ended up grabbing 416 puts at 10.29. 10.29. Where are you? 10.29. Oh yeah, I remember why I grabbed it here. I grabbed it here, sold into here. This pop. Now you can see if I bring it down to the smaller time frame, I bought the lower day break. So I bought right in here, 10.16, 10.14 right here. So the 160 to what was it? 160 to 3.15, which was right here. That little pop. We got. Then I'm not seeing on the 10-minute, the 20 EMA, but I got that little pop. Then it kind of quickly rejected down to lower day. And that's where I ended up grabbing the 416 puts right here, right at 10.29. It's exactly where it is, a lower day. And they went from, I got them at 210. They went from 210 to 279. So I got the little bounce. Then when it started to, I mean, obviously, if you buy at the calls at $1.60 and they're up to 3.15, you're stupid if you don't take that money. I mean, it's almost 100% right there. So it did pop, did get that. Then when it came back to lower day really, really quickly, I figured it was going to be a knee-jerk reaction to take out lows or something, and that's what I did. I ended up buying it. I actually kind of thought it was going to like dump more because it's been doing nothing but dump the last couple days, or yeah, for the most part. So I actually thought it was going to dump more, and it didn't. I mean, it did, but not like what I thought it was. It was just a quick takeout stop. So I did play that, but I ended up taking puts again at 10.55, which is right here. 10.55, right when it came underneath VWAP. This is where I ended up grabbing. I think we're going to come back down here, and then it just ripped. So I had the 418 puts at 215, and I ended up dumping them at $1 for a loss. So then I ended up grabbing puts again at 11.44, which is right here. pre-market high. Rate was rejecting the 200 EMA, which is the purple line. I grabbed puts right there, even though I cut these ones right here. I cut them. Actually, I think I even held them. I think I even held them longer, but yeah. See, 1144 right here. 200 EMA rejection. I grabbed 421 puts at 230, and they went from 230 to 325, and that little dump to VWAP. Then I ended up grabbing calls at 1227, which is right here, the break of high a day. Because if you look at the action, and this is what I'm seeing as far as from my point of view, a quick pop, then it comes down here to hold. You dip by for a little quick pop, then it dumps to new lower day to take out stops. Then it comes up here to where it broke down right in here. Then it rejects a little bit. Then it comes back up to higher day, and most people, if it's ranging, it will they'll take call puts right here, and they pop it just enough to stop people out before they drop it right here. So you can understand that they love to lately lure people in and then take out the stops, and that's what they love to do right here. So that's why I always look for that when you have these like fake out breakouts, which happens a lot of fake out breakdowns, that they're doing it to fish out the stops. So I took calls right here at 422 at 1227, which is right here. I took the 422 calls at 165, and they went from 165 to 227 just for a quick little higher day break, and that's all I played. I didn't hold it for a monster gain. I took the money. When you get into it and it starts going your way, I start scaling out into strength. I don't try to panic sell when it's dumping. I prefer to sell into the strength. And if you used active trader on toss, you just use the join the ask button, or you could just point and click on the price, and you'll you can sell that way too. So which I do both. I do primarily mostly click on a price and have it sell into those prices, because I kind of like, I have this thing where I like to stick to the 5 or 10 cent increments, but on SPX you can't do that because it moves so fast. So yeah, I had calls right here on the breakout, high day breakout. Then I took calls again at 245, which is right 245 right here. I'm not quite sure why I grabbed it there. 245. Oh yeah, it bounced off VWAP and it came up here. I was probably thinking it was going to break over 422, and sometimes I like to buy it ahead of time, because if you look, it did break out, came back down to VWAP or 20 EMA, then it started to break out, but it didn't. It made a tiny bit of a lower high or resistance at 422. Then it rejected again. Then it quickly came back up. So the more times it touches a certain price, the higher probability that it's going to break. So you get it once here, 2, 3, and this would have been number 4. I got in a little prematurely, and it dumped on me, and I ended up dumping it for a loss. Then I ended up grabbing calls at the last 10-15 minutes, which I got them at 42 calls. All the ones I got up here were 42, 45 calls. I had at 370. I waited to the end of the day, back to the lower day. I grabbed 4,200 calls at 345, which is a rate here. I grabbed it right there. They went from 370 to $6 in that pop up. So that was a nice little play at the end of the move. That was kind of expected. That was going to stay in the range. Most of the times when you have these big, massive days, the next day will be a consolidation day, where we'll typically trade in a $3-4 range, which to me, the $3 or $4 range is pretty good, because back during the Obama administration, SPY only traded between $1 to $2, and $3 to $4 was an extreme range. And then volatility just went through the roof because of Trump and China trade wars and COVID. And so the extreme range is $10 to $15, 15 being on the higher side. which is almost like occurring almost every day now, a 10-point range, 12-point range. And that's why when you have a 12-point range, I'm always like looking to find the bottom, because 10 points is a huge range. But lately they've been kind of pushing the envelope towards 15. So you got to understand the range, because range does play a huge factor in trading. So with that said, I had a nice end of the day play that day, but I got lured in a couple of times. That was definitely one. I mean, I probably should have waited a little higher, a little more conviction up here, but I'm not going to lose sleep. Now I took 2 losses again. I took 2 on Wednesday, 2 on Thursday. No, I took, let's see, Thursday. Oh, yeah, I remember this day. I was not expecting this. Now, I sit in the trade ideas room. The 28th. NFLX calls over 193 and SPY puts under 421. 421 was right here, because at this point in time, SPY was right up here. So I was looking actually right in here. So then I was using this lower candle right here, 421. I mean, it's 421.41. So I round down to the whole numbers to make it easy to remember. 421 just looks better down here, because you get resistance right here, and it does break below that. It's going to dump. So, and that's what it did. So I grabbed the 420 puts at 335. And they went from 335 to 338 to 422 in that little dump right there. Then I ended up grabbing them again at 946, which is right here. Let me blow this up a little more. Yeah, okay, I've got this right in here, and I rebought in here at 418 puts this time at 277, and they went from 277 to 419 in that little dump right there. Yeah, I grabbed it right here to 419. Then I ended up, wait, what am I talking about? 418. Yeah, they went, 419. Yeah, dropped from 277 to 419 right there. Then I grabbed 420 calls at 1041. 1041 right here. Now this is what I was talking about. Get a green candle right here, and they take out the stops right there, and you could have dip bought this right here and pushed up, and they did it again right here. You rejected VWAP, dropped it down, take out stops. So if you dip bought it here, you got taken out here. Then it had this green candle again, and people probably went and bought calls right here again up here, and they took out the stops again. So they took out stops twice right here. Now, if you went and bought when it makes new lower day, you could have got that little pop right there, and you could have got that pop, and then you would have gotten this. But I didn't grab it right here. I just got that move, and I didn't grab that at all right there. So I did grab this play right here. When you had this doji candle come in, it started to break above this area right here. This is where I ended up grabbing it. I grabbed the 420 calls at $3, and they went from $3 to 428, and that push right there. I'm just looking at something. Yeah, then I ended up grabbing puts at 1221, which is right 1221. Oh yeah, I know what I did. I thought it was a range day, and I was buying the RCT trend line. So I bought puts right here. I don't know why. I just, after looking at this, this was a massive J hook. If there's ever a J hook to look at, right here, it's a huge J. It looks like a big check mark. So yeah, I bought the 420 puts at right here, RCT trend line, which is a higher day, and then I didn't dump it. I held on to it, and it just kept going. I averaged down at 1234, which was right pre-market high, and it popped up, came back down, and I ended up taking a loss on that. I stopped out. at $1.40. My new average was, because I had it at 248, average down to 203, and my new average was 211, so I did stop out. Then I ended up trying to buy puts again at a 111 right here. I got the 423 puts at 193. And it did drop a little bit. How did I manage not to do that? 111, which is right here. Oh, I probably bought it right down closer to down here. Why did I even buy it there? Let's see. Let's look at the hourly. Is this Thursday? Yeah. Oh, I think I was looking at the 428 level. Where is it on there? No, I wasn't even looking at that. 427. I might have been looking at this pivot right here. 427. That's what I think I was. Yeah, I think I was looking at this right here. Get a resistance candle, and you get well, it's a little bit of support, resistance, support. So I was actually looking at that, and I kept trying to pick the top, and I shouldn't have done this. I was not expecting SPY to dump from 422 to 418, a $4 drop, then pop $12. I was not expecting that, so I took puts again right up in here, and I ended up stopping out again. Then I ended up taking puts at the end of the day, 246, which is right here. Now you can see right here, I actually was thinking that it was actually going to have a dump. It's making a little bit of a symmetrical triangle right here after a $4 drop and a $10 pop. This is where I was thinking we were actually going to get a drop. And I think I was still actually holding my 423 puts at the time. Yeah, I think I was still holding them, thinking it was going to drop here. Then when it popped right here, this is what I ended up getting out. So then I ended up waiting to, let's see, 1446, 1440, yeah, 246. And this is where I ended up grabbing SPX puts. I grabbed SPX puts at 4240 puts, 4270 puts at $20. So I was kind of very annoyed with the run, thinking we were going to get a dump, and we did. So they went from $20 to 26. So definitely helped the end of the day with that last play. It was a nice little play, but I just kept trying to grab the top on Thursday, trying to grab it here, trying to, figure out where it was going to resist and pull back, and I shouldn't have done that. I should have just waited, but I did what I did, and it is what it is. So I shouldn't have taken that loss. I shouldn't have taken this loss. So it's two losses right there. I shouldn't have even taken the plays, but I did. So, oh well. Now on to Friday. Friday I did better. Now one thing I love about Baba, I love that Baba does this almost every single time. Baba gaps up. Almost every single time, it drops it open. Now it's nothing. There's nothing for sure. Nothing's ever 100% accurate in trading. So, but the highest probability is Baba when it gaps up, that it's gonna end up selling off. So if you just stick to the level, which I did say in the trade ideas room, Baba puts under 100 and SPY puts under 422. 100's right here, as you can see right here. This is the pre-market low, popped back up and it came back down. I thought for sure it was going to break. Then it popped up a little bit, rejected pre-market high, but I waited for it to come back down, and this is where I grabbed it. I grabbed it at what time? 9:37. Yeah, I came back down here. I had the 100 puts at 126 and went from 126 to 199, and that little drop. Because I bought at the money, and Baba, they move. Now, the one thing that I do hate about Baba is that when it has massive pops up, gap ups, that the options take forever to recalculate. You will literally just look at the options chain in the market, and Baba will be moving, and the options chain won't move for 5 minutes. And it'll just sit there and just be blank. and then after 5 minutes plus, it will start to see price come in and recalculation, and then it will have nasty spreads, and then the spreads will tighten up a little bit. So yeah, I mean, Bubba, you can never get Bubba as far as with options right at open, because the price doesn't do anything. The options don't even recalculate the first 5 minutes. It's really bizarre, because every time the gap's up on Bubba, I watch the options chain price action, and it's just stagnant. It does nothing. It's just blank for 5 minutes, and it's very annoying to watch. So, but when they do recalculate and it didn't break the level, hasn't dropped too much, I'll jump right in. So I did grab Baba puts right there at the 126, went to 199. Then I ended up grabbing SPY the rest of the day. I play SPY so much, but I like playing SPY, especially when you can figure out the gains and you can predict what's going to happen. So I bought, let's see, SPY puts at 944, which is right here. I bought the 423 puts at 250 and popped up, but I kept it, and then it finally dropped. Oh yeah, I bought them right here for thinking we were going to break lower day, and then it popped up. Now Amazon and Apple dropped their earnings. Apple had good earnings, but they didn't provide any guidance. Chip shortages, then they had massive downgrades, so that is not a good for a huge company like Apple to have downgrades and not give guidance. It's unlike them. Even if you lower guidance, last time Apple lowered guidance, the thing tanked a lot. So then you had Amazon. It had a huge miss. And if you look back, I was looking at Thursday night that every time Amazon misses huge, the market goes down with it. I don't care what Apple was doing, but Apple having downgrades and not providing guidance just solidified that this was a short play all the way. And so I was not worried about it going against me. Amazon took a huge hit. Amazon's going to drag down the market. This is just a fake out, or this is just a way to lure in longs before they dump it, which they did. So I grabbed the 423 puts at 250. I had it here, wasn't worried, and they went from 250 to 402. Yeah, 250 to 402. So that was a nice little play right there. Then I took 421 calls at 1105, which is right 1105 right here. Now they made a green candle, popped it up a little bit, took out the stops. This is where I jumped in. I grabbed the 421 calls at 207. They went from 207 to, let's see, 243. Not much of a play. Now I was looking at this area because this is where it was support right here the previous day. So when I reacted to it, came back down, and that's where I ended up grabbing it. So that was a nice little play. Then it went up to the VWAP 200 EMA, and it quickly rejected. So I ended up buying SPX 4200 puts at 1156, which is right here. It came up, like I said, rejected 20 EMA and VWAP, came quickly right back down to lower day. So that's where I grabbed the 4200 puts at $8.50. And they went from 850 to 25 all the way down. If you held all the way through, so that was a huge move. And I know a couple people in the room. Actually, $8 to 25 was actually down to here, not the whole move. The whole move, I think it was like $60, if I remember correctly. But yeah, it was from $8, $8.50 to 25, was just from this lower day to 418 level. That wasn't the whole way down. It was just right here. Then I ended up buying calls at 1155, which is lower day right here from the previous day. Let me just double check the time frame. 1156. No, 1255. Yeah, 1255 right here. Yeah. First one was right here. You can see this support level. Then it was down here. This is where I grabbed calls right there, thinking, okay, 426 to 4. We're getting to an $8 range. It's going to bounce again. Anytime you have these exaggerated moves, usually there's a little bit of a bounce. So I did grab the 417 calls at $1.77. They went from $1.77 to 323, and that popped right to the 20 EMA because they were at the money. Oh, they weren't even at the money. Yeah, they were in the money. Yeah, they were in the money. So then I ended up grabbing calls again at the 311. Now I waited. I should have bought puts right here, but I just don't like buying puts when it's already down almost $9. Because going back to the range, where range is a 10 to 15, you don't know what the range is going to be, and I didn't feel comfortable buying puts after a $9 down day. Now I should have took into account Amazon's huge miss and Apple, that the bottom could really fall out, and I didn't grab it, and they did, so it did end up dropping a lot more. So I did grab. This is where I kind of got ballsy. I got calls at 311, which is right here. Now I bought calls right here at 311 because I was thinking same thing. $12 drop going into a weekly expiration, end of day. The futures and shorts are gonna end up covering, so they're gonna end up having a massive pop. So I bought down here at what's 311. Why did I buy it that particular way? Let me just back it out just a little bit. I was looking, yeah, under the 415 area. I think I was looking at that. 413. There's a reason why I was looking at that. Maybe it was over here. Let me blow up the 1 hour. Yeah, I could have been looking at this right over here on the 1 hour. And I could have been looking at the RSI. I don't really remember, even though it was just a couple days ago. But yeah, I ended up buying the calls right here because you see green candle, and then they took it out. I think this is where I ended up taking it. And I had the SPX 4175 calls at 311. They went from 460 to 570. Dollar. You stick to the dollar play. I got out, then it came back down. I got it again right on this. So I bought it here, sold into this pop, then it dropped back down. I grabbed it again. I grabbed the 311. Yeah, I got that, sold into that. When it came back down, I grabbed 341.60 this time. And I grabbed the 41.60. I grabbed it at $5.90. It went from $5.90 to $9.30. So yeah, this one right here, I grabbed the 41.75 calls. Then when it had the pop up, I sold it, came back down, and I grabbed the closer to at the money. Yeah, I grabbed it right here. So I grabbed it at the 336. So I grabbed it right here. I didn't grab it in this candle. I grabbed it in this one right here. Yeah, right here. I think I tried to grab it, and then I didn't, but I ended up grabbing it right here. So yeah, I got this, sold into that. I bought it right here and sold into the same candle. Now if I was to bring it down to the 1 minute, you can see what I'm talking about. Let's see, 336 right here. No, right there. That's where I ended up buying it right here, and it popped up right there. So yeah, they go from 590 to 930 now. They move so much because I bought at the money, and at the money on SPX, just a small little movement will send them versus if you're out a few strikes. So I do like playing at the money at the end of the day because they triple really, really fast. But yeah, I got it here, sold, bought it here, sold, and the last play of the day, when it came back down here, I grabbed it again, and that's where I took the loss on the last play of the day. Thinking the same thing, that I keep buying it and selling it when it gets over $1, and just keep buying it, and thinking we're going to get the end of the day pop, and we just didn't do it. It just ended up dropping more. I mean, it's just ridiculous how much it dropped. Dropped $14 plus, so almost $15. So it was just crazy that we didn't have this end of the day squeeze. We just got this little. We did play this really well, but I got smacked on that, but I didn't play that much, so I didn't lose that much. So I played pretty small at the end of the day. But I did get some. If I didn't get these good moves right here, I probably would have played a little more with size and probably took more of a hit than that. But because I had these two good moves right here, I didn't play much at all. If anything, I didn't. I was still very, very green for the day. But that is it for the day, the week. Hopefully, this recap has helped you understand a lot of the psychological aspect of trading with SPY, especially SPY and the way market makers think and stuff like that. You got to keep that into account that they're trying to make you lose money, not make you rich. So that is why they do what they do. And hopefully that gives you some light into that aspect. And that's going to do it for the recap. And hopefully that see you in the room. And thanks for watching.